What is up, everybody? We are back with Capitalism Lab, episode number 3. Due to technical difficulties, a few things had to happen off screen, so I will catch you up on that. Quite a good amount of time has passed since the last episode, so I'm just going to catch you up on what we did. We were targeting to open a bank. We ended up doing that. Here's our headquarters in the city of Craig. Now, to do that, we ended up having to sell a commercial building to fund this headquarters, as well as to open up our first banking branch. I'm going to go ahead and explain, really, this main banking screen first. So, we opened up our headquarters. We take in deposits, so customers come in, and they deposit their money into their either, really, any of these different products, a savings account, a 6-month CD, 1 year, all the way to 5. We as a bank take those deposits and loan out that money to borrowers that need loans. The borrowers that need loans come in tranches. So for those of you that don't know what these tranches are, AAA are the safest of the safe, best borrowers. They're going to pay the least amount of interest because their credit rating is so good. They're not risky at all. They pay on time. They pay in full. Your dream borrower. The trade-off, obviously, we're going to take in a lower interest rate because of their lower risk. Now, as you go down in tranches, you go down in credit score. You go down you go up in the level of risk. So the C tranche here is really just called junk debt. And because these borrowers are more risky, they're less likely to pay on time, they're less likely to pay us at all, we require a higher interest rate on the loans that we're giving to them, if that makes sense. So we make more money off of these borrowers, but we only make that money if they pay us on time and in full. So that's where defaults come in. So we should expect the default rates to be higher for these lower tranches, and as you can see, that's exactly where they are. Some competition, the other players in our industry, Walgreens, Panasonic, and HP. So we ended up opening 2 other kind of support branches around the city, and we started to market our brand. I'm going to get into that now. As you can see, we have a very tiny market share compared to the rest of these banks. Panasonic is really dominating the industry, but if you look at our branch, for example, we have 70 million in deposits at this branch, and here you can see the rates that we're paying on these products. So what happens is we can adjust these, and we're going to pay the customer 4.5% to deposit their money into this 1-year CD time deposit right here. We then take that money and loan it out, like I said. And if you look back at I believe it is on our deposit screen, this net margin right here, this is this amount, or it's the difference between this amount and what we're going to get when we loan it to these people. So that's we make the spread, right? So we pay out this amount to, depending on the product and depending on the customer, we pay this to them, and then we go out and use their money to loan it at a higher rate, and we will make the difference. And that's exactly what this margin is here. So obviously we want this to be positive. Higher the better. We make more money if this is higher. But to keep up with competition, sometimes these rates adjust. That's how we make money. Our bank, however, so far has struggled to become profitable, and a lot of that's just due to these defaults here, year to date. Those can be managed through our allocation, right? And what happened really off screen is we started with a more 2020 allocation, and now we've adjusted it to more 50, 30, 16, and pretty much no junk debt at all, just because we want to improve cash flow. So that's really what's going on with our banking situation. We have a branch here and a branch up here in Craig. That's it. You're caught up. One other thing that we did in Green Evers, we ended up building, and we actually issued some stock to do this. So we issued more stock to raise some funds to open an apartment here and open an apartment right here. These are now at 100%, and we really just did that to go ahead and support this cash flow, because as you can see, this started to slump as we opened more branches in our bank, just because the banks are really bleeding us dry at this point. So we're really looking to continue to improve this number by messing with the allocation. I don't know what's the optimal allocation. It really depends on the economic cycle and what part of the cycle we are in. Okay, so where are we now? We have 2 branches, trying to work on branding. We are going to up. Oh, one other thing I should mention. Looking here, so there's 3 ways that we can really improve our service of banking: our staff level, the waiting time, and the quality of service. The skill level of our staff and the quality of service are improved by this training budget. We slide this up and down, and as we spend more, they're going to improve their skill level and the quality of service will go up. That's good. That helps us with to fight off competition and to stay competitive. The customer waiting time, the lower the better. And again, part of that's comes into play with the training budget, and another part is just opening more branches where people need service. So we only have 3 branches. We are not scaling as hard as some of our competition. What I'm confused, I think this is the number of branches in the city that they have. So yeah, market share in the city is about 1%. Market share overall is about 0.23%. Again, that's just because we haven't expanded to other cities yet. We will get there. I just want to focus on making these first branches profitable, because this number right here scares me. And it scares me because we're bleeding cash. Banks have to be very liquid to take on this level of risk, and especially when a lot of customers are demanding their money, we need to be able to give it to them. So that is where we're at right now. We're trying to really reverse this graph right here to a more positive direction. And that is where we are at. We have about 20 mil to work with. Our profits around 9 million, our operating profit, which is good. And again, when we first opened this bank, it fell to around 3 to 4, and we were able to get it back up to 9. We have around 20 mil to work with. A part of that we have to keep on hand just in case our bank starts to face some sort of liquidity problem. And we also have some money in the market, only about 5 mil, but we Inditex actually pays a pretty decent dividend of around 6%. And they're a pretty massive company. So they're worth about $2.5 billion, which is actually okay. Well, that's not that massive, but that's pretty decently sized for this game. We're worth around 460 mil, so we're still a small cap company. But as you can see, this is where we issued stock, and I'm gonna let you know right now, raising funds, I saw it with more of a negative light at first, but again, if you put that money to good use like we did, this recovered and we ended up a stronger company than before. We're earning a good amount of money per share. I'd like to increase that even further and continue to improve this cash flow so we can become more of a consistent player in the banking industry. But we're in a good spot. One thing I want to do is in the city of Green Evers, we can go ahead and increase this rent back to 100. I put that down at 90 just so we could fill up. But we're going to improve that now. And I think I picked some pretty strategic positions for these apartments. This is right next to, first of all, a bank, a toy store, looks like a carnival, and the police station. I mean, that's prime real estate, and I think they even have more room to expand. There's a lot of residential right here, and then our other location right here, I think we're right next to a high school. Again, very solid. If you look at the shopping convenience, it's maxed out. We could have maybe more sports or community facilities around the area, which can always be added. So I think these are in prime positions to generate very decent cash flows for us. So that's what's going on. We don't have any bank branches in Green Evers yet. They all reside in Craig. I think we have a lot more to do in Craig before we try to expand to other cities anyways. It's just the challenge of reversing this to become positive, and we do that through an economies of scale. I think expanding, raising our deposits, messing around with this loan allocation. I'm not sure what the best allocation is, so that's something we're going to have to deal with. I mean, if you look at these default rates, the majority of these defaults are coming from the C tranche, which we don't have any allocation in right now. So this should slowly go away. Same with the C tranche, the triple C. Otherwise, look, we have almost no losses, very little, under 1 million losses with around 3, 6, 7, almost 10, 11 mil in revenue generated. So that's a nice spread, and with a net interest margin of 2.8%. This is very nice. I think we're in a good spot. It's just venturing away from these riskier borrowers. So we should hopefully see this turn positive, because these defaults have to go down. It's not sustainable with this, especially with the level of marketing we're doing too. That's becoming actually the most expensive item in our income statement. But overhead alone is very expensive. Training, we had that up there for a while to try to boost the quality of service, but I'm gonna hopefully gradually improve that over time. Okay, that's a lot. One thing I want to do too. There's this building called headquarters, which serves as just a main hub for our corporation as a whole. If we can place a headquarters somewhere, I think we can designate certain tasks or to divisions that we set up. So we're in a point now where our cash flow is recovered enough where we can afford to pay other people to do some of these micromanaging things that we have done up to this point. I think I don't remember what actually we can have in the headquarters other than that, but for only 2 mil, I think it's worth. We're probably gonna put this nowhere near up in here. Look at this land cost, 211 million. That's unreal. I want to actually see the land cost of this. Yeah, it's worth almost 80 million just to land alone. So it's booming. Our headquarters would have to be somewhere out in this rural area if we wanted it. Maybe by police station, maybe by this middle school. I don't think it's that important. Yeah, there's no monthly cost, so wow, really? Even this land cost is 30 mil out here. Jeez. Okay, maybe we put our headquarters in a different city. I don't know how much better it'd be. This really isn't much better. Wow, maybe that's something we should have done a little earlier. Oh, it actually... City of Murray. Why is land so cheap right here? I'm not sure. This looks like a nice area, too. Oh, there's a mine right here. That's... well, I could explain it. Huh. We're gonna hold off on that. I just think the land's... I'm not exactly sure what we gain by... I mean, yeah, we could probably automate some of this, but it's fine. We're gonna start the sim. Now that you all are caught up. We have 20 mil that we're probably gonna put in the market. Super Shots could buy back some of their stock, but I think it's trading at too high of a premium right now. And we don't pay a dividend. Oh well. Inflation dove at the... okay. New chairman at the helm. You know, we could hedge and put in one of the our competitors, Panasonic. I'm looking for companies just with a decent dividend that we could receive. I mean, look at all these stocks, though. They just shot up exponentially. It's just hard to find a good price to get into. None of these have had really correction at all. I'm waiting for UCB's trading at a PE of 9. 6,000 a share. Kind of expensive. Maybe we hold off. General Motors just IPO. They're kind of flat. You know, let's put it in General Motors. Oh, the public doesn't own any. Okay. Panasonic does, but we would probably have to purchase at a premium. Not that big of a premium, but not worth it. Wow, this is taking off. Does anyone pay a good dividend? Inditex, we still own. Their dividend, they pretty much slashed it. So we're up about 53, 54% on that, actually. Wow, that's kind of crazy. Craft. Oh, public doesn't own any. Starbucks. Jeez. All these are so expensive. I'm just surprised there's no splits going on right now. Pfizer. Okay, this is a good correction right here. This is a good correction. The public doesn't own any. Okay, we're gonna pay a premium for this. I think this is the best chance that we got. Okay, they demand 8,000 a share. Yeah, no, that's not happening. Wow, they really gobbled up Pfizer. Okay, and see, this is what I mean. Our capital ratio is struggling, and I don't know why. I'm not exactly sure how to fix that. But we're gonna have to transfer money over just so they can stay liquid enough to meet their banking demands. Wow, look at this. We hit new highs for operating profit. 14 mil. I don't think it's from our bank though. I don't think our income's. Oh, actually, okay, we have improved. These defaults here are a lot lower than they were. We need to improve this with lowering this, and that's a double-edged sword. Where are the defaults coming from? Yep, still most of them in C. But this, yeah. I don't know if we actually still own, or we still have kind of outgoing loans to this, because new allocations, yeah. So, our margin's falling 2%. That's not where we want to be. I still think I'm gonna hold off though. Someone's buying our shares though. I like that. We do like that. Trading a PE of 65. But I mean, our market cap has doubled really in the last episode or so. I think they have really high expectations for growth from us. I want to make sure our CEO here isn't a victim of a takeover. Okay, see, this is where it gets kind of scary. I only own 28%, which means IKEA, Daimler, if they start to increase their position, I'm gonna get a little scared. I don't know if we would be a takeover target. And look at this. When did I invest in NEC? Wow, we got in a good time. That's a nice, almost 500% gain. Let's do something with that. Let's go ahead and sell this. So this is our personal CEO. I want to figure out how to transfer money from this, this guy, to our company. Wow, we cashed out big. Probably should have sold that in increments. But that gives us 22 mil in personal. We could use that to buy back some of our own stock. The public owns around 6%. I wish there was an easier way to maybe do some sort of capital contribution, but I don't think we can do that. I think we would have to just buy back some stock, which is okay. I mean, yeah, because our personal dude, he can't really do anything for our business. So let's use that 22 and buy back some stock from the public. That'll inflate the price, but gotta do what you gotta do. That leaves him about 3 mil. I'll probably put that in, I don't know. Doesn't really matter. How do I still have, wait, what? Didn't I just sell this? How do I have 40 more million? Did I make that much from NEC? That's a boatload of money. So with that in mind, let's try to buy out some of these. I don't want to be a takeover target. Hitachi owns 10%. Oh, this is NEC. Never mind. 40 mil to work. What is this? Yeah, I only own 28%. I already bought out the public shareholders. Let's buy them out again. Buy the 6. Kroger. What's we could offer 255. They want 482. Yeah, no, not happening. They want 426. I'm scared of we're up near 30% now. I don't know. There's not a big enough position except IKEA that is really making me nervous. It's probably okay. We still got to park this for 33 mil somewhere. We could buy real estate with it. Maybe. Since I can't really buy back my own stock, let's go ahead and let's just park it in somewhere with a decent dividend. None of these are really over 1%. Pfizer's had a decent correction though. The public doesn't own any. Any others that are kind of flat? Bondwell, public doesn't own any. I don't want to just wait on this. Inditex. We could hop back into Inditex. Public doesn't own any. You know, I wonder if can I? Okay, let's go back to Inditex for a second. Can I buy it from Super Shots for like an inflated price? I don't think so. It won't let me offer. Okay, never mind. That probably would have been cheating. Is there anyone that'll offer me a decent price on Pfizer? Demand 8,000 a share. Yeah, that's not happening. Hey, there's not much we can do about it then. We could always park it in bonds. Treasury notes are yielding 2.64%. It's not great though. Sony bonds trading at a premium. What is a good yield? Let's go ahead and buy 9,000 of those. You're all rated really good though, and Continental. We'll buy some Continental. So could put the rest in treasuries, just for the time being. So we'll put about 17 mil in treasuries. Okay, we're out of cash, so it's better than nothing. I just don't really have another good place to put it. We bought back some shares of Super Shots. And as far as Super Shots, this corporation, we have around 27 mil to work with too. And our capital ratio is too low. I wish I knew why this was. So it's our equity capital to total loans. 3 ways to handle it. How do I get this above 7%? Oh, look at this. Okay, our profits finally not yet broken even, but we're getting there. This is a really healthy number though. Yeah, our bank. So we have some interest we could pay off. Actually, what's our loan at right now? Can we just pay that off in full? We're still holding Inditex. Where do we see the loans? Let's repay. Oh, okay. Oh, yeah, we got 20 million. Let's just pay that off. Actually, no. Let's go back to Green Evers and actually just expand our real estate even further. I think that's a better use of our cash. This is still very cheap right here. With a supermarket there, an electronics store, this, and a police station. I mean, this still looks like good real estate to me. So we opened up our third apartment in Green Evers. Very nice. That should improve this even further. We're just going for cash flow until our bank is profitable at least. Then we'll decide next steps. But we are in a good spot, everybody. I hope you enjoyed the episode. I apologize for the technical difficulties, but this is getting exciting. We're making big moves, improving cash flow, and we have more to come in the future. But I'm going to leave it at that. Thank you all for watching, and enjoy the rest of your night.